Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, let me introduce myself. My name is Muthia Safira Lisandi. My NPM is 234111028. I'm from class MNJ 23C. In this video, I will explain a little about capital market. The first is understanding. The capital market is activities related to public offerings and securities trading, public companies related to the securities they issue, as well as institutions and professions related to securities. In simple terms, the capital market is a place where investors can buy and sell securities such as shares, bonds, and mutual funds. Next is the history of the capital market. The history of the capital market in Indonesia began in 1912 with the founding of the Vereniging voor de Effectenhandel, Association for Securities Trading, which was initiated by securities traders from the Netherlands Handel Maatschappij, NHM. This institution was formed to facilitate stock trading by European and Dutch investors who invested capital in companies in Indonesia, such as plantations, mining, and banking. The main objective of Vereniging voor de Effectenhandel is to create a more transparent mechanism in stock trading, increase trust and credibility of the stock market in Indonesia, and attract more investors. The institution grew rapidly in the 1920s, but experienced difficult times during the World Economic Depression in the 1930s and World War II in the 1940s. After Indonesia's independence, the capital market was rebuilt with the formation of the Jakarta Stock Exchange, BEJ, in 1952. The Indonesian government began to focus on developing the capital market in the 1970s, with the formation of the Capital Market Implementing Agency, BAPAM, in 1977. Indonesian capital market experienced significant growth in the 1980s and 1990s, and became one of the largest capital markets in Southeast Asia. In 2007, the Financial Services Authority, OJK, was formed, which combines the functions of BAPAM and other financial services supervisory institutions. Vereniging voor de Effectenhandel is an early milestone in the history of the capital market in Indonesia, which has laid the foundation for the development of the capital market in Indonesia to date. Next are the benefits of the capital market. The capital market has various benefits, both for investors and for the economy as a whole. Here are some of the benefits of the capital market. 1. Vital source of funding. The capital market is a vital source of funding for companies that want to develop their business. Through the capital market, companies can easily access funds from investors for various purposes, such as building new factories, launching new products, or expanding into new markets. This easy access to funding allows companies to grow and develop, which ultimately strengthens the economy as a whole. 2. Attractive investment vehicles. The capital market offers a variety of attractive investment options for investors with various risk profiles and investment objectives. Investors can choose to invest in stocks, bonds, or mutual funds, all of which have different potential returns. Through investing in the capital market, investors have the potential to gain profits through growth in the value of securities purchased, dividend distribution from companies, or bond coupons. Investing in the capital market can be a way to increase wealth and achieve long-term financial goals. 3. Even distribution of income. Selling shares through the capital market can be considered as a means of equalizing income, because company profits can be distributed to all shareholders, including small investors. This allows investors with varying income levels to own shares in the company and profit from its growth. Thus, capital markets can help in creating economic equality by providing opportunities for everyone to participate in economic growth. 4. Driver of strong economic growth. Active and healthy capital markets provide companies with easy access to funding, so they can build new businesses, increase efficiency, and innovate. Company growth driven by access to funding in the capital market will increase production and consumption, which will ultimately encourage economic growth. Thus, the capital market is an important factor in driving economic growth and creating new jobs. Next are the types of capital markets. Capital markets can be divided into several types, including 1. Primary market. The primary market is the place where companies sell new securities to investors for the first time. This process is generally known as an initial public offering, IPO, where a company sells its shares to the public to raise fresh funds. These funds are then used to finance various company needs, such as building a new factory, launching a new product, or expanding into new markets. 2. Secondary market. Unlike the primary market, the secondary market is a place where investors can buy and sell previously issued securities. Trading in the secondary market occurs through stock exchanges, places where investors meet to carry out securities buying and selling transactions. Investors in the secondary market have various goals, from making a profit by buying securities at a low price and selling them at a higher price, maintaining investments and making a profit from dividends or coupons, to cashing out investments to get cash. 3. Money market. The money market is a place where short-term financial instruments are traded, with a maturity period of less than 1 year. Companies or individuals can borrow funds in the money market to meet short-term funding needs, such as paying employee salaries or purchasing raw materials. Investors can also benefit from the interest rate difference between loans and savings in the money market. Some examples of financial instruments traded in the money market include certificates of deposit and commercial papers. 4. Capital market. The capital market is a place where long-term financial instruments are traded, with a maturity period of more than 1 year. Investors in the capital market generally seek long-term profits through growth in the value of securities purchased or dividends or coupons paid by companies. Shares, bonds, and mutual funds are examples of financial instruments traded on the capital market. So the conclusion is: the capital market is an important part of a country's financial system that connects investors with companies that need funds. The capital market provides various benefits, including a source of funding, an investment vehicle, and a driver of economic growth. For investors, understanding capital market material can help in making the right investment decisions, while for companies, the capital market is a source of funding for development and growth. Okay, that's enough of my understanding about capital credit. I'll end it. Wassalamualaikum warahmatullahi wabarakatuh.